will start with event after reporting period, which is under MFRS 110. Okay, so basically in this topic, you will learn on whether the event that happened after the reporting period should be adjusted into your financial statement or merely disclosed in the notes to the account. So basically the idea is any event that occur after the financial year end. Let's say your financial year end is on 31st December 2019. So whatever event that occur after that date, but before you finalize your financial statement. Okay, if you have learned this topic in auditing, the auditor is the company is allowed to prepare 6 months after the end of the financial year before it can be audited. Okay, alright, so what happened if some event happen after you close your financial year end? Okay, so basically there are adjusting and non-adjusting event, and of course there are several examples here, but from this diagram in particular, they highlight on the going concern affected and the proposed dividend. Okay, a going concern affecting the company must be treated as an adjusting event, and proposed dividend should be treated as a non-adjusting event. I will explain that in the next slide. Okay, so this is a definition under MFRS 110 on the event after the reporting date, which is those events, both favorable and unfavorable, good or bad, okay, that occur between the end of the reporting period and the date when the financial statement are authorized for issue. So when I state that event that occur after you close the account, dia mesti ada deadline. Okay, occur sampai bila? Because next period kita nak open the next financial statement. So this is basically the idea. Let's say our current year is 2019, so we open our opening date is on 1st January and our closing financial year end is on 31st December 19. So when we prepare financial statement for 2019, so all the economic activity should be reported between 1st January until 31st December. So full stop. So any activities after this date should be reported in 2020 financial statement. But under MFRS 110, it states that if, let's say, event that happened after the closing date, but before the board of director authorized the issue of the financial statement, that means before the board of director authorized the publish of 2019 financial statement, there are something happen here. Okay, between this date, between this gap. So should you adjust your financial statement 2019, or should you just disclose in the notes to the account for 2019? Alright, so that relates to whether that's referring to whether the event is an adjusting event, which means adjusting your financial statement, or it is non-adjusting, means you have to disclose in the notes to the account. Okay, so let's say it says that the board of directors authorized on 1st February, for example. So 1st January until 1st February dia authorized. That means 1st January until 31st January. If anything happened on that date, during that date, so you have to question yourself, is it an adjusting or non-adjusting event? Okay, how do we know? Adjusting event is basically it provide an event that provide further evidence of condition that existed at the end of the reporting period. So if this event provide a further evidence of whatever that you have reported in your financial statement in 2019, that will be considered as an adjusting event. But if those events are indicative of condition that arose after the end of the reporting period, then it is considered as non-adjusting event. So this event, okay, does not clearly show that you may have asset or liability on the reporting date. So if it is not related to something that you are reporting in 2019, therefore it should only be disclosed in the notes to the account. Okay, alright, next. Okay, this is the date when I say it should be the date where the board of director issue the authorized for issue of the financial statement. Okay, these are example of adjusting event, okay, where it affect the financial position and performance measurement of the entity. That's why we have to adjust our financial statement. So the accounting treatment is to adjust the element of financial statement affected by this event. For example, measurement of bad and doubtful debt. For example, at the end of the year, you provide an estimation. Okay, 5% of the trade receivable cannot pay, but suddenly after the financial year end on 15 January maybe, you identify, oh, this customer bankrupt. That means what you have reported, that 5% estimation is not correct anymore, because during the event after the reporting period shows that that estimation is no longer accurate. Therefore, you have to adjust your trade receivable figures. Okay. Also, anything relates to the realizable value of the inventory, because when you evaluate your inventory should be at the lower of cost and net realizable value. Okay, when you prepare 2019 financial statement, it should be the lowest, but after that, during the event after the reporting period, okay, you identify, oh, the NRV is much lower, for example. So you have to adjust your inventory figures. Okay, and then also regarding the court case, for example, this one you will cover in a provision and contingent liability. You have not covered this topic yet. Okay, basically, for example, when you prepare 2019, during that year, in 2019, you are being sued by your employees, for example. And when you are being sued, probably that you need to pay a compensation cost to your employee, okay, for damages, for example. Let's say in 2019, you identify at that time it does not fulfill to recognize that compensation claim. Nanti you belajarlah under the topic provision and contingent liability. Okay, when you are being sued, ada masa kita kena recognize, ada masa yang kita tak kena. Okay, when you prepare 2000, now we are talking about the adjusting event. When we prepare the 2019 financial statement, at that time we should not. Okay, based on that situation, we should not recognize it as a provision. We only show that in the notes to the account, saying that we are being sued by the employees. Okay, but you did not show that in financial statement about the compensation. You did not recognize it as an expenses. Okay, but when you do the adjusting event here, you identify that on January the court gave a result that okay, company lose, the company need to pay, so confirm. Okay, therefore what you have been reported in 2019 as just a disclosed, now you have to change it and to show it in your financial statement as your expenses and your liabilities. So that's another example when the event becomes an adjusting event, when it provides further evidence of whatever that you have reported in 2019 financial statement, and therefore you need to adjust that figures. Alright, so I hope that you can get the idea. Same goes to impairment of assets. Okay, these are all estimation, which later you find that it's confirmed. Alright, it's confirmed that the impairment is maybe a much higher or much lower than what you have estimated and you have provided in your 2019 financial statement. Okay, cost of asset purchase or proceed from disposal of asset, and profit sharing or bonus. Okay, so what about non-adjusting event? This is where you don't have to adjust your financial statement, but you merely show it in the notes to the account. So what do you disclose? It should be the nature of the event, the estimation of the financial effect, or a statement that such an estimate cannot be made. Okay, if you can't identify what is the amount that you have to state in your notes to the account. So these are the example of the non-adjusting event. Okay, decline in the market value of investment after the reporting date. Okay, a major because this is a market value, whatever you reported in your financial statement is the cost of the investment, so it does not relate to the market value. That's why you don't have to adjust your investment account. A major business combination after the reporting date, announcing a plan to discontinue an operation disposing of asset. This is just a plan, yeah, announcing a plan. So you don't have to adjust. Major purchases and disposal of asset or expropriation of major asset by government. Okay, by government. So you also don't have to adjust your financial statement. Destruction of a major production plant by a fire. So this is a natural disaster. So you don't have to adjust your financial statement. A major restructuring, major ordinary shares transaction, changes in tax rate, entering into significant commitment or contingent liabilities, commencing major litigation. So whatever that you don't adjust, non-adjusting event is merely a disclosure in the notes to the account. Alright, this is a special case on dividend and going concern status. Okay, for dividend, proposed dividends are not present obligation and are not to be recognized as liability, but a disclosure is required. Okay, for example, when you prepare the financial statement 2019 just now, okay, there is no proposed dividend. Maybe you only have interim dividend, which is interim dividend, dividend that has been paid by the company to the shareholders. Okay, after the financial statement date, okay, during the event after reporting date, the board of directors declare a dividend. So when the board of directors declare a dividend, okay, it is a proposed, but the date was made after the financial statement date. So a proposed dividend does not make the company liable to the shareholder on 31st December 19, because the decision made on the proposed dividend is made after the closing date. Okay, so the company just need to disclose in the notes to the account. Alright, relating to the going concern status, okay, you have learned this, the fundamental and the principle of accounting. When you prepare your financial statement, you have to assume that you are adopting a going concern assumption, which means that when you open a business, you are preparing your financial statement, you are reporting your economic activities every year on the basis that the company is going to operate until foreseeable future. Okay, that you have no intention to close your business. So that's the going concern is all about. But if you identify that now the company is going for liquidation, bankruptcy, liquidation after the financial statement date, okay, last time when you prepare your 31st December 19, it is based on going concern, right? But after that date, but before issuance of the financial statement, you identify that the company is have difficulty or whatever, okay, is going for liquidation, you need to close. Therefore, the financial statement that you have prepared for 2019 is longer correct. It's not correct anymore, because those 2019 that you have prepared is based on going concern, while the current status is that you are in liquidation status. So what you need to do is you need to adjust your financial statement so that you will prepare it based on liquidation status. What does it mean by preparing the financial statement based on liquidation status? When you want to close your account, of course you need to revalue all your asset and your liability, because you need to dispose and pay all your liabilities. So that is the meaning of liquidation basis. That means you don't have carry forward figures to the next year, because you are going to close your account and close your business, of course. Okay, so that's why under going concern, if you find that you are in the liquidation status, you are closing your account, therefore you have to adjust your financial statement. If this dividend and the going concern status, the event happened during that after financial statement date and before the board of director authorized for issue. So this is this example. Okay, this is the opening period, and then your closing period here on 31st December 14, and this is the date where your board of directors authorized for issue, okay, for shareholders approval. So even after reporting period is between this date. Okay, so of course, if the event happened during this period, of course you know that event happened. Alright, this is what you have learned under accounting policy changes in accounting estimate and error. During this year, you identified there was error in previous year, so you do the adjustment here. Now the question is when the event happened after you close the account, but before, of course, before you publish the financial statement, before the board of directors declare to publish. So even after reporting period is what is happening here. Okay, all right. So this is just another example. Okay, so let's continue with this example in the next video. Thank you.